Yeah, actually, it's 4 minutes past the top of the hour. My clock is very wrong. But we'll try and correct it because we are 4 minutes past the time we're supposed to begin. But the discussion on the round table begins in a moment. As always, let's take you back in history, 9 years to the date today. The date is the 12th June, 2015, if I'm not wrong. Let's bring it up today in history and take a look at what we had in the bold newspaper then, 12th of June, 2015. Wait for it because as you can guess, it's all about the budget right there on your screen. Treasury Cabinet Secretary then, Henry Rotich, falls back on traditional sin taxes, heavy borrowing, and raids landlords' pockets to plug hole in budget to fund security, infrastructure, and the teachers. I don't see anywhere there where hustlers are, but that was the headline. Painful budget. The Jubilee government's economic agenda is working and things are getting better. That was the headline from the bold newspaper, Friday, June 12th. The year is 2015, 9 years to the date today. Let's look at some of the areas that were targeted then by the CS. And we told you about the winners. Capital gains tax replaced with 0.3% from 5%. Military, defense, and security agencies have been given more money or were given more money in that budget. The energy sector, Geothermal Development Corporation got 13.2 billion shillings then, and the county's got 287 billion. It's grown almost twofold in the last 10 years. Education, 2,500 teachers to be hired and schools to get ICT. Youth were also winners. Job creation, 20,000. Fishing, importation of nylon yarn used in fishing nets, zero rated. This budget, as you can see, Wanjiku was a little bit friendly to the Wanjiku, but there were also losers: tobacco, beer, the traditional losers, used car importers, motorists, landlords. Motorists seems to be losing every year, sugar importers, and all. This was the headline, the bold newspaper then. And obviously, before we take a look at what's happening and the thoughts of the ladies and gentlemen on the round table tonight, I'd like to take a look at the video of the week. But before the video of the week, we have a lot of time today to discuss this, so don't worry. The Finance Committee, that's the Planning Committee of the National Assembly, the Finance and National Planning Committee retreated to write a report on the Finance Bill 2024 ahead of its tabling next week on the floor of the House. This is after the conclusion of public participation that began on the 15th of May. They got views from you, the Kenyans, on the proposals in the Finance Bill. However, some of you are still skeptical that your views will not be factored in the final document, as Jeff Kirui now reports.
With more than 600 Kenyans and stakeholders from various fields appearing before the National Assembly's Finance and National Planning Committee to give views on the proposed taxes, the committee is once again on the spotlight over concerns that most of the inputs in the 2023 Finance Bill were not factored in the final decision.
We have participated in other public participation, and most of the issues we raised and the proposals we made were never put into use. They were ignored. So I declined to make any proposal because I feel whatever we say will not be put into use.
In the 2023 Finance Bill public hearings, many stakeholders raised concerns and opposed increasing value-added tax of petroleum products from 8 to 16%, but ended up being effected in the Finance Act that saw prices of fuel increased and subsequent increase in fare prices.
Anybody who wants to check proof of public participation, check the Finance Bill of 2023 compared to the Finance Act of 2023. They're not the same document. And the difference between the bill and the act were views that came from the public through public participation.
The proposed 16% VAT on bread and the 2.5% motor vehicle tax are some of the concerns that have unanimously been rejected during the public hearing sessions.
Bread is staple food in Kenya, especially for low-income earners. The taxation will raise the cost of living with devastating impact on the economic welfare of the citizens.
The committee is now expected to table the report in Parliament Tuesday next week, with the assurance that the views from Kenyans will play a key role in informing the 2024-2025 tax measures.
As we retreat, we want to assure Kenyans that this was not an exercise in futility. We want you to hold us to account on the views that what the bill is and what the committee report is going to be. We are going to make sure that we accommodate as much as possible the views of Kenyans, even as we try to balance generating revenue to fund the budget estimates of 24-25.
Jeff Kirui, KTN News.
All right, and as we wait to begin the conversation tonight, I'd like to begin it with a video that we took off the social media from Money 254. Now, this is a depiction of a Kenyan of what's happening in this budget. Take a look.
If you own a car or are planning to buy one, you'll be surprised by the number of taxes you pay just to keep the car running on the road. Of course, the highest amount of tax you pay is in the importation, or if you are a direct owner, that cost is passed to you by the first owner who paid the importation tax. When you're importing a car, you'll pay a total of 5 separate taxes, including the import duty, the excise duty, number 3 is VAT at 16%, and then railway development levy, and then number 5 is the import declaration fee. For perspective, assuming you are importing a Vitz with an import value of 460,000 from Japan, this number of taxes will come to, for import duty, you will pay 161,000, and then you will pay an excise duty at 25%, which comes to 155,250. Then you will pay VAT at 124,000. You will pay railway development levy at 6,900, and then you will pay an import declaration fee of 11,500. The total comes to 458,500 shillings. That's almost similar to the custom value of the Vitz, which was 460,000. So you pay half in the value of the vehicle and another half in taxes. Those are 5 taxes. Now, once you have bought the vehicle, a new set of indirect taxes kicks in. There are a total of 12 taxes you pay when you own a vehicle or are using the vehicle. And of course, the biggest cost is incurred when you are fueling your car. A big percentage of the cost you pay for petrol or diesel goes to these separate taxes. They include excise duty on fuel, road maintenance levy, which is also charged on the fuel, petroleum development levy, and then there is petroleum regulatory levy, which is separate. Number 5 is the railway development levy. There is anti-adulteration levy. There is the shipping levy. There is importation declaration fee for fuel. Then there is value-added tax on fuel, which has increased from 8% to 16% in the last 2 years. On top of that, whenever you are buying a vehicle spare part, you pay VAT. Whenever you are renewing your insurance, you pay an insurance premium levy, which is pegged at 0.25% on your premiums. In addition, whenever you are going to the garage or to a service center, you also pay a 16% VAT for the services you are given by your mechanic. This is separate from the motor vehicle circulation tax, which has been proposed under the Finance Bill 2024 and which is still undergoing public participation. This could mean car owners will pay an extra tax that is 2.5% of the vehicle's value. For example, if you have a car worth 1 million shillings, you will be paying 25,000 every year while you are renewing your insurance.
Now, that video from Money 254 essentially summarizes what a lot of Kenyans feel today. And it has been said by so many quarters that Kenyans are overtaxed. Everything you do attracts a tax. So 17 taxes on motor vehicle. If you have a contrary opinion or view from that video, please share with us. We'll be looking at it. But they claim, apart from the 2.5%, there are 16 other taxes related to the same one. So you buy a car, You drive it, you go to a petrol station, you're buying spare parts, everything is taxed. We'll be looking at that extensively. Lady and gentlemen, I want to welcome you on the show tonight. It's the eve of the budget reading. But only budget, is it still budget reading? Is it really budget reading?
I know.
Eh?
It's proclamation.
Proclamation, because we already know. You know, it used to be a big tradition and everyone would be huddled around radio and television when the budget was being read. But we all know now what is contained in the finance bill, which is the most important. Diana Gishengo is the executive director of the Institute of Social Accountability. She's here tonight. She has spoken a lot about this finance bill 2024-2025. We have Hesbon Omolo, who is a council member. ISPAC, Institute of Certified Public Accountants of Kenya. And finally, Ronald Bosi, who's the group managing partner for Ronald's Africa. Thank you, ladies and gentlemen, for coming. We have a discussion, quite a discussion tonight, but I'd like to ask all of you on the table, did you give your views, Hesbon, before Parliament, or did ISPAC give its views, and what were their concerns to Parliament with this Finance Bill 2024?
Thank you, Ms. Jungu, and good evening, viewers. Yes, as an institute, we gave our views, and we have consistently given our views on the various bills that come before Parliament, and the finance bill is no exception. We were able to highlight some of the things we felt needed to be relooked at, but also to appreciate some of the good proposals, especially those touching on the income of employees. There were a few take-homes that you could talk about. So we have been able to give our views comprehensively on each and every clause that we felt needed to be looked at. But again, having said that, the finance bill comes in, but before the finance bill, we have the budget estimates of revenue and expenditures. And from there, you know whether you have a deficit, and therefore, as we give our views, we should also appreciate that the 340 billion deficit that needs to be financed by the finance bill, then money has to be gotten from somewhere. So the idea is, yes, we give views on what we feel needs to be relooked at, like the controversial motor vehicle tax, but again, what do you replace it with within that envelope?
Okay.
I think the balance of both is important. But it has never
existed before. Why would there be a question of what do you replace it with?
Yes and no. I think we've had something similar to motor vehicle tax before, except in the manner in which it is. For those who owned vehicles way back in the 90s, there is that license you'd pay every year on your motor vehicle, and you'll have a sticker on the car. Only that at some point it was dropped.
Okay.
If you go to a country like US, they pay a similar tax every year when they renew their licenses for motor vehicles.
Okay.
Yes.
So it exists. Do you think the concern is because of the time it's being introduced? Because there are so many more others, so there's much attention paid to this.
I think the biggest challenge is that we've more or less exhausted the legroom. Where do you go next? Because almost each and every area has been taxed to a limit where we are almost exhausting the space we have. You look at what the government has done in terms of even managing the expenditure aspect. So fiscal consolidation is on the right trajectory. We've moved from a deficit of 6% to GDP. It's gone to about 4 point something. It's reducing every year over the last 3 years.
Okay.
So consistently there's progress. But then now where do you go?
Where do you go from there? I know one of the concerns from ISPAC is the 3.4 trillion targeted in the financial year 2024-2025. You say that it will increase the revenue to GDP from 16.2% to 18.6%. And I know the president has spoken over time. He wants to take it from the 16 to 22%. We'll be discussing that. But let me bring Dana now to this conversation. Dana, did you present views before Parliament, and what is the summary of your concerns to Parliament?
Yes, we did present our views to Parliament as the Okoa Uchumi Campaign Coalition. It's a coalition of civil society and citizen groups, students, and so on. Our main concerns with the finance bill, we commended some proposals that are trying to streamline certainty of taxation. But we were opposed very, very hard to the deepening of tax. It is not expansion. We are not looking to tax people who have not been taxed. We are looking to increase the tax burden on people who are already paying tax. And our major concern was Kenya does not have a revenue problem. Our biggest problem in our public finance is an expenditure problem. If you look at the budget of Mwai Kibaki and the revenue, he used to collect, I think, close to 247 billion. That has grown to 2.4 trillion. Surely we do not have a revenue problem whatsoever. What we have is how government utilizes the money. And whereas the fiscal deficit in the budget has gone down, prudence, we are not yet there. There's still a lot of wastage, and we are not seeing tightening at that particular level. Government still borrows very, very extravagantly, and yet debt is just deferred taxation. So that was our biggest problem. We also raised concerns of the mischief that we continue to see in the finance bill, where legality of taxation, how it is defined. A motor vehicle, the proposed circulation tax is not an income tax. Sneaking it as income just on the basis of legality. And this time we went before that committee and told them we're not giving you options. Because when we give you options, you create a shortcut for the legislative process. Remember what happened to the housing levy. They got all these ideas, oh, we can make it 1%, we can contribute this, and they short-circuited the entire process of legislative making. What was presented for public participation is what we give input to. If that is altered, we must go back and start the process afresh. So this time, when it comes to what value are we adding in banking services, there is no value. So VAT, just remove motor vehicle. And we also have concerns with the eco levy that has been introduced. Very much an IMF-driven process, because it's supposed to say we are responding to climate change. We value our climate very, very much, and you would imagine we are civil society. But we listen to people on the ground, and we know we must allow Kenya to be productive if we are still to be able to pay revenue in future. So that was the second concern, that some of the proposals do not feel like they speak to the sovereignty of the people of Kenya.
Okay. Quite some concerns. And Ronald, as an individual or as an institution, and I know you're part of the institution here, your concerns with the Finance Bill 2024?
Yeah, so my biggest concern with the Finance Bill 2024 is like the government, the feeling, the way we talk to our clients, is like the government hates the people. The people feel like the government no longer cares on the ground, because if you look at the measures, some of the measures that have been introduced in this finance bill, they are very punitive. Like, let me give you an instance. Like, for instance, as a practitioner, we always have assessments from KRA, and some of those assessments can be very ridiculous. So oftenly you have to object to those assessments. And what this finance bill is proposing, that if you object to those assessments, traditionally you know that KRA is supposed to respond within 60 days. But now they're saying that KRA should respond within 90 days. But again, if they don't respond, then the assessment holds, which we find it very ridiculous. It is like, now as a taxpayer, you're exposed, you are hanging in balance, you don't know what KRA will say. You're not expecting, if you don't get feedback, know that they have declined your objection.
Okay.
We find that very ridiculous. The other issue is saying that even if you object, you are appealing a tax. They're saying that they can still issue, they can still block your bank accounts on the basics that you need to pay the taxes. They can still issue an agency notice against your bank accounts, even though you have disputed those accounts at the tribunal or so it defeats justice.
Yeah.
So the feeling of the people, one of the biggest challenge we have with the government when they're doing tax, especially the current government, we don't think that they have done enough to earn the trust of the citizens.
Okay.
They are going too far in terms of implementing various fiscal policies and tax policies, but without creating that kind of trust. So the citizens are feeling like we have a government that doesn't care about them, especially through this pronouncement. And if you look at the most popular issue, some of them that is very common now is the issue of the motor vehicle tax, which again we say that yes, the finance bill has some of the goodies, but the government has always been mischievous because it has always brought in some things that are very disruptive in nature. You know, last year we had the housing levy, and which was really opposed, because last year finance bill had some very good, interesting proposals, but because of the two things that were very extreme, the housing levy and also the issue on the fuel VAT on raising it to 16%, which were very disruptive. The government forced its way and had its way, and still implemented it. Yeah. So the feeling that of people is there is a bit of mistrust, and that's why even when you look at the issue of public participation, people are wondering, will they still even implement
what they said
in the parliament?
Yeah.
It's like almost 90% of the people resisted the housing levy. It still went on. Now we have the motor vehicle tax of 2.5%. Well, most people are saying we need to resist it, but we don't trust that the government really cares about the people. So that is the situation, especially from my point of view.
Okay.
Yeah.
I want to look at a few of the areas in these proposals that we picked as of huge concern to majority of Kenyans. And as you have mentioned, I'd like to begin from the proposal on motor vehicle tax. They'll be on your screen shortly. So the proposal for the motor vehicle tax is at 2.5%. Joanne, if we could just have those graphics up now. Yes, 2.5%. And this has been described as an additional tax, especially to motor vehicle owners who have been paying other taxes. And Hesbon has just told us it existed, but not in this nature. Moving on now to the excise duty on internet and social media advertisement, which now goes from 15% to 20%. We know that internet, social media, mobile phones are being used by a majority. In fact, a lot of people use their mobile phones for a lot of transactions. And the moment you increase the internet, the cost of internet, you're basically taking it up. But I'd like to speak to my guests on this when I come back, because it's actually said that it used to be at 20%, ladies and gentlemen, but it was decreased to 15%. And now it's back to 20%. So are we going back, or we're just maintaining where we were? Away from this, let's talk about the specific goods that have been vertible now, the goods and services. So these are goods that were from exempt to 16%. And part of them, I'll just describe this as bread. They just said bread is getting 16%. Away from that, there is what is called pressure-sensitive adhesives. There is what Ronald mentioned, the polythene, plain polythene, supply of ethanol, service for use by the local film, services for use by the local film producers. That's another area that is of huge concern. Let's now move to what KRA is doing. And this is based on data protection. And this should concern a lot of you, because now they're giving the commissioner power to amend the act to allow for the processing of personal data for the purpose of tax assessment, enforcement, and collection. I don't know, this could go, even as we remain with the graphic on there, Hesbon, this should go through, if it goes through, what are the dangers to this? If the commissioner can now amend the law to access personal data for the purpose of assessment, enforcement, and collection. Hesbon.
It's a difficult conversation, but I would look at it first from the broader context, Mijungu. And one is that, remember I said, we have a budget deficit that needs to be financed of 340 billion thereabout.
Yes.
The motor vehicle tax would probably plug in about 40 billion. So when you scrap
I think it's more. How many vehicles? Because we calculate it based on how many vehicles we have in the country which are on the road. I saw someone from Parliament, I think not Parliament, Mutahi Ngwinyi say that we have actively 1.2 million cars on the road. I doubt if it's 1.2, there could be more, but continue. Yeah, but because if you use that, 2.5 lower end and higher end, it goes to around 90 Anyway, yeah, it goes to around 90 B.
Yeah.
Yes.
So even if it was up to 90 B,
Yes.
so the conversation should be then that if you drop this, where else do you raid to get the deficit? The alternative then, we must go back to the estimates, reduce the estimates. The reality is the expenditure estimates of the financial year 2023-2024 and 2024-2025 are almost at par, which means there's no increase at that level.
So we're just looking for more money
so
to
my
reduce
thinking
that
is,
deficit. Okay.
within the fiscal space, the government has been doing very well, if you ask me.
Yeah.
But I also say that at the beginning of the current regime, that they inherited a very bad space in terms of how the nation was run, and it was a matter of time that the cookies would crumble.
Yeah.
So where we are now, yes, we have this challenge that KRA would want to raid and get information. Why would they want to do this? The president talked about our tax revenue to GDP being at around 14 point something. We would want it to go to around 20. But the question is, if you look at our overall GDP, it's projected to be about 15 trillion. And we are saying our GDP is growing at close to 6%. If our GDP of a nation is growing by close to that margin, then you are plugging in close to 1 trillion every year into an economy. If you did simple math, that part of that revenue generated, of course, the GDP has all other components, would then plug into our tax collection.
Okay.
Why is our tax not growing at the same level? We have about 7 million Kenyans who have PINs or thereabout. But those who are directly taxed through the income tax process
Less than 2M.
are about less than 3 million.
Is it 3 or 2 million?
It's about 2 million.
2 million.
2 million.
2 million.
So there's a huge number of
5
people
million.
who are only paying indirect taxes, because indirect taxes for all of us.
Okay.
So now, how do we get these people? And I think
The
the
tax
thinking
bracket,
even around
yes.
the motor vehicle tax is that you'll find so many vehicles on the road. Their owners are not necessarily people who are employed and paying the income tax, but they file nil returns or they use other avenues, and therefore there's so much that is not plugging into the economy from a tax collection perspective. So there is inefficiency at KRA level in terms of tax collection, and this idea of now getting to people's bank statements is to ensure that then they're able to
Get some money out of them.
In my view, that would probably infringe on rights that may end up bringing legal cases, and therefore it's something that needs to be approached with a bit of caution. But what is the alternative?
Okay. Dana, the government already has all this information. Let's be honest.
Yes.
So my concern as even a lawyer is giving the commissioner that power to amend to get this personal data from the 7 million that he's speaking about. What are your concerns from the Mwananchi perspective with giving this such sweeping powers to the commission? Is it sweeping, or it's power that ordinarily you'll get through statutory amendment of the act?
It's sweeping powers.
It's sweeping powers.
When you think about the Data Protection Act and what is being proposed, because literally the proposed amendment just waives everything in the Data Protection Act for KRA. That is just ridiculous. This is an act that took 20 years of negotiation. It is data that was supposed to come in and ensure that we protect even medical data. Remember the challenge we had this year with medical practitioners and compliance to ATIMs because of the disclosures that were required to make around patients and patient data. Now you have waived that. It is a law that had said collect only the data you need. You're not sure. You're scoping to know whether this person pays direct tax or indirect tax. Ronald here has indicated all the things that KRA can guess. You're giving them power to use your data to guess. What can that result in? Anything. Any day they will wake up, because once they make the claim, you must go and defend yourself. And they are making the claim out of violating your right to privacy. Why? What is this taxation crisis we are in that we must forfeit our human right for the sake of taxation? For money that is needed for what? For a recession that was created because we are not paying taxes? No. If anything, that should be created for when we're investigating corruption. It is not. We've asked for debt audits. We've not seen similar waivers. And for the whole, why should we trust KRA with such data?
Yeah.
Why should we trust them? There's nothing. Already there's a trust crisis with government and KRA. Then you decide for any violation, we will not go to the Office of the Data Protection Commissioner. We have waived that. It would be simply ridiculous. Okay. Even before we brought this, remember, and I think some of the especially civil society organization trusts linked to politicians who are dissenting at any given point have been attacked on account of taxation without these sweeping powers. And then this is what you want.
What if
you give them fully?
Yeah.
This will be the new military and security laws amendment that we'll be facing. So I'm hoping it is something that can be thrown out
within these proposals and submissions.
Yeah.
But if I remember clearly, I don't remember anyone submitting on this, but it would have been a huge concern to me. And Ronald, as you answered
we submitted.
You submitted
we submitted on this,
okay.
And I know a number of organizations
who talked about this.
Great. Yeah.
Great. Let's I invited Kuri Kimani.
Yeah.
He said, Ken, but we just finished public participation. Give us a week. Next week we shall come. No, we wanted him today. So as you respond to this, limit your response to for the purpose of tax assessment, enforcement, and collection.
Yeah.
Yes.
With regards to data protection.
Yes. With regards to giving these powers to the commissioner.
Yeah, that can be. But I'm wondering why they should go that extent. Because already they have a lot of information. They have access to bank statements of individuals, maybe through...
They can subpoena them through the court.
Yeah, so they can get that. They have a lot of information. In Kenya, we operate what we call a self-assessment system. So it's a self-assessment system. It's based on trust. Every individual is supposed to exercise self-assessment. But the way KRA is moving is trying to turn that into now a government assessment system. And that's one of the most expensive tax administration process that you can have. Okay. Because you see, once the government say that they will only come and take the information, and you'll tell them now come and have the taxes, which is the most difficult. So the government, instead of trying to look for these sweeping powers in order to invade into people's privacy to collect tax, it should concentrate on building trust and confidence.
Okay, you're back there. Yeah, you're back to building trust.
Actually, everything revolves around that.
Okay.
It's one of the it's far-fetched to say that you'll have to go to and collect tax forcefully.
And we have to give this power to a tax collector.
Yeah, and the way she said that mostly this power has been abused. It can't be trusted. Okay. Because most often, are they complying? What if they come and invade my privacy and that information is used to jeopardize my security,
Should we hope that the government will take care of our data if provided? Yeah. I don't know if you can answer that. It's hope. All right, let's move on to from KRA and data protection. Let's look at zero-rated e-mobility, and I know Diana spoke to this because this is from zero rated to 16% VAT. That is a slide after the KRA. And the targets here are electric bicycles, solars, lithium batteries, and electric buses, right? This is self-explanatory. I'd like to go now to the tax deduction or deductible pension contribution. This is, again, another area that perhaps you touch. So the tax deductible pension contribution, it's been increased from 20,000 to 30,000, right? Or given an alternative of people who earn 360,000 annually, right? Yeah. Now, for me, it's the implication because it's anticipated that it will encourage Kenyans to save more, right, for their retirement through increased tax-free pension contribution. So if we increase it from 20 to 30, then somehow I'll be encouraged to save more because now I know there are 30 wameweka juu kidogo. Is this practical, Ronald?
Yeah, it's practical. It's a welcome move from KRA.
So this is one that is welcome?
Yeah. It's a welcome move from KRA because last time, NSF was only standing at 360 billion shilling, a very low saving for the country. And
that can finance all the counties in 1 year.
And the president has been very proactive in terms of increasing savings. The only problem I have also with that proposal, you see, the problem is you don't pay tax when you save, it's tax deductible. But when you are now earning your pensions, you are taxed. And I remember,
still double tax on this. Because when it was being remitted, I'm sure there was a tax. So you save it, no one cares. At the moment I say bring it, tax.
So it's a deferred tax.
It's a deferred tax. Okay. So
Yeah.
that's the problem you have with it. Diana.
One of the welcome ones. The only thing is it benefits people with higher income.
Okay.
Definitely, if you look at your pension contribution, you're like, oh, at least the amount of money that will be taxed. And there's a lot of tax deductible expenses that have been introduced in this particular finance bill. Very, very welcome. Even the amount of money that you will be taxed when you're taking per diem, again, it's a percentage of your salary. This benefits people with higher incomes. It's very, very welcome. Where is it headed? Where does pension money go in this country? When you save?
NSSF?
NSSF, insurance companies, all this, when it goes there, it is the bulk of the money that is used to buy government treasury bills and bonds. So are we encouraging saving, or are we in expanding the pool for government to borrow domestically?
Interesting. That's a view I didn't see yet. But
no, I think the reality is the last time there was an adjustment on this was 2005. We are almost 20 years later. So even on the basis of just cost of living, everything else,
it needs to go up.
It needs to go up. So I think it's a welcome move.
It's welcome. So you don't have no concerns? Pool for government to borrow government bonds?
The only challenge
the government to borrow, I would look at it a little bit differently. As long as we are consistently reducing the deficit, then I know we are moving away from excessive borrowing. But the biggest concern is, and which probably we've not discussed here, in that 3.9 trillion envelope, there is 1.2 trillion for consolidated fund services. That is more than the entire government wage bill.
And it's about 1.13.
Yes. And out of that, 1 trillion is interest on debt. Now, if you're going to pay that kind of money, and you measure that trillion vis-a-vis our overall public debt that is 10 trillion plus, then you're saying our government is paying 10% of the money it borrows, both domestic and external, as interest. Now, the issue is, what is this business that our government is doing that it would pay 10% on investment? It's actually 15 now. And the issue then is, what are we doing around our monetary policy? Because that is where there's a collapse. And probably as we think about where to raid to get the 340 billion deficit, so that we do not then be innovative around which tax measures to bring, we may need to rethink our monetary policy. Because my thinking is, when we had interest rate controls around 2016, the government would borrow at about 9%, and still investors would put their money. If the CBR rate is now 12%, and then you add what the government is giving when it borrows, it's about 15% on those bonds. And then now, what does it do to the private sector? You go to borrow, you're paying 20% or more. Now, which kind of economy is that?
I wanted to discuss that comprehensively, but let me bring two more slides. Just two more slides in the concerns that we pulled out. Apart from the tax deductible pension contribution, there's this thing called digital marketplace. It's a huge thing. First, when the proposals were made, there was a lot of cry about, why are you targeting us? We're trying to raise money ourselves, and then now you're taxing us. Now, withhold 5% of the earnings from the residents and 20% from non-residents. Now, this one included digital content, services, goods, and property. First, my question to you, ladies and gentlemen, is this feasible and how will it happen? Who do I begin with on this? Diana, marketplace.
They understand markets the better.
Better, okay. No, but you are considering the marketplace, because the implication, the proposal could potentially lead to resistance, particularly from the non-residents. You know, a whole 20%, anything you earn on digital space, whether it's services, whatever it is, 20%. So what happens, because we're trying to bring people in, but then you're saying if you're a resident, 5%, if you're not a resident, give us 20%. So what happens? Is it practical? Let me come to you.
I think I don't see, I personally don't have a problem with the non-residents paying 20%. For residents, one is that other jurisdictions equally tax. Yeah, so it's just alongside the global best practice. So I don't see anything wrong with it.
Best practices.
Yeah.
Rather,
because ordinarily, if you are trading, even doing your business, you pay 30% corporation tax.
Yeah.
What are you investing in these people to get that money so that you can tax them and ask them? That is the moral question.
I think we need some clarity on this, because when you talk about the digital marketplace, you know, we have the e-commerce and we have the digital assets or digital, marketplace. So you see, when you're talking about the e-commerce and you're trying to say that if I'm selling my goods online, I do a withholding of 5%, that's very punitive. Because some of the goods, even the margins are not more than 5%. So, you know, you cannot introduce a 5% withholding on goods because that will be quite punitive. But on services, it's okay because even professional services, any other services, they attract a 5% withholding tax. So it will be in line with the other tax regime, whether the services are offered online or even, or physically. But again, for goods, it will be punitive, even both for residents and non-residents. Even for non-residents, it will even be more punitive because who is willing to supply you goods?
I would ask, what is the mischief with this? What is the mischief that the government is trying to address with this? Have they realized a leakage or they've realized a pool that they could potentially get something from, but they've not? What is the mischief that
I believe the mischief they're trying to see is that most people who transact on the digital marketplace, most of them don't have physical places that you can reach them and assess them taxes. So you're saying when you're paying them, you withhold so that they're able to catch up with them. So that's the mischief, because if you transact on the digital, no, you don't have a place of an office. You don't have a place whereby they can come and get a hold of you and assess your tax. So they're trying to say, if you withhold, then now you...
Who are the agents here?
Now the agents are the ones who are paying, especially the corporates. So if you pay for services or goods on from a virtual perspective, then you have to withhold, then exposing the person who is the supplier of the...
As corporates, they won't just decide, you know what, we're not paying traceable income to these people. We pay you on, through envelopes when you're done.
And for corporate, you can't manage to do that because you see, for a corporate, you're trying to look for a high level of compliance. Okay. So of course, you see, that's why they're trying to look at it when they withhold, because mostly when these people provide services to corporates, then corporates have an obligation to comply. Okay. Because if you don't comply, then the obligation comes to. But let me just tell you something I know, Ken, about that. There's also something that that is in this finance bill with regard to that is also a bit quite confusing. The issue of the digital service tax. Remember that we had introduced 1.5% digital service tax that the government now is proposing to waive and now bring in what you call a significant place, you know, all that, whereby they are now saying that they are going to do 6%. And this actually betrays the order of this finance bill, mostly IMF, because IMF is representing global partners, because who have been victims of digital service tax, the multinational companies, the Google, the Amazon and all that. Now trying to now remove the DST, which is just 5%, which is 1.5%, and then now saying that they can pay 6% on profit there. That is quite unenforceable. They can't even enforce such kind of legislation, because where are you going to get a company like Google and tell us, give us the profits that you made from Kenya, and you don't have even a resident place? So what they're just saying, they are now saying we are not going to tax them anymore, and yet they derive really significant revenue from this country.
I think the thinking around that
Yeah.
to move towards significant economic presence
Yeah.
is that ideally within the OECD countries,
Yeah.
there's the issue of base erosion that
Yeah.
they're trying to avoid.
Yeah, yeah.
And I think within that space, it's consistent.
Yeah.
And Kenya is one of the signatories within that space.
Yeah.
But again, now the practicality of it then is what we are waiting to see.
Yeah,
How
it's
that can be done.
very difficult to enforce on that. Yeah.
Okay, so the last slide for me is the contribution deductible for tax purposes. And this, I think, are the reliefs that are given, especially when you pay them. The SHIF, employer deduction for affordable housing, and contribution for post-retirement medical fund. I think this is a positive one, right?
Yeah, it is.
And finally, I like to understand this. When they say weekend and public holidays to be excluded from undertaking tax-related activities such as submitting tax returns, notices, and other documents and payments of taxes. What does this entail?
I think there's been lack of clarity when you're told, like Ronald was saying, KRA has 60 days to respond. Now, when you now start counting those 60 days, you don't know whether to count a weekend, as part of that. So then when it comes to, you'll end up with a case where it's thrown out because you're told you've responded after 62 days or 63 days. So there needed to be some clarity around that.
So that is the clarity this brings.
Yeah.
So holidays are excluded.
Yeah.
Weekends.
And there are some taxes where you need to file them within, I think, 5 days. There was one that was 24 hours. So
Okay.
then if there is a holiday, then...
So this
it's
makes
excused.
perfect sense.
Of course, yeah.
All right, now that I'm done with the slides, I'd like to come to, because always when we talk about the Finance Bill 2024, we are accused of only picking the negatives. So I know you've spoken about two positives, but I'd like you to look in there because I know all of you have analyzed this. Yeah? And try come up with something positive that Kenyans should look forward to. In this, I know you have a couple. Eh? Do I start, Ronald? Where do you think Kenyans should also look to when they're saying, well, the government, it's all give and take. There's some hidden, because the president will tell you, but why are you just talking about what you think is negative?
It's negative, yeah.
Yes.
Yeah, the tax has some goodies. One is, especially when it comes to the things you've talked about pension. And then the other thing we are talking about is also mortgage, contribution to mortgage. Pension being raised from 20,000 to 30,000, then also contribution to a mortgage scheme, which can allow people to relive. The only thing, the problem we'll have is how many people can even afford to contribute to mortgage, because with the increase of indirect taxes, excise duty and VAT, is actually hampering people's ability to save. So you might find that also very few people will follow, but they actually welcome more. The other issue is issues when it comes to, one of the things that has been also been confusing in the previous tax legislation is the issue of per diems. Traditionally, per diems were taxable at 2,000 shillings, which is quite ridiculous, because if you go to a place, you need to accommodation, meals and all that. It will never be 2,000. It will always be more now. So it has been a very old item in the income tax. But amending it to 5% of the gross income is okay. The only problem with that amendment, again, it affects low-income earners, because if you're earning a salary of 10,000, 5% cannot even take care of you. So we hope that when they go to the parliament and discussions, they could amend it to have a minimum capitation.
Okay.
We say that a minimum of 2,000 shillings or 5% of the gross salary, which is a good thing now to try to regularize the issue of per diems for people. And then the other issue is also for low-income earners is the issue of meals, which are being now raised. Initially, we used to have 36,000 shillings to 48,000 shillings, which is okay. Now, government can be able to, if you're a company, you can be able to give more meals to your employees. Yeah, so there's some good things
in there.
Yeah,
Okay.
yeah.
Diana, what is it for
And
you?
also very important is the issue of trying to exempt issues to do with the transfer of businesses. So if you're transferring a company now, it's exempt from VAT and all the other taxes, which is also a very good move.
Okay.
Yeah.
In addition to what has been celebrated, I think increasing the amount, the annual turnover for a company to become VAT registrable from 5 million to 8 million is welcome. That allows small businesses time to get to be compliant. There are certain procedural issues like expanding the types of invoices that KRA will accept moving forward. So that is also something that is welcome in this particular finance bill. Other than the ones you have said, I'm just looking at our memo. It is delete, reject, delete. And it's fairly long. Which other one are we accepting?
I'll talk about the delete and reject. But let me hear for Hezbollah first. Yes, what is in there? I know you've mentioned quite a few, but what else are we missing out that the viewer should know? This is actually for you.
I think the issue of rental income tax at 7.5% is a good one, because I think previously we had it at a higher scale. So I think that's a good one. It will, and still being final, I think that's a good one. And of course, there are certain taxes that have not gone up.
Okay.
They may remain silent, but we say hallelujah for those
for
ones.
that.
Yeah.
But for what group of people does it take care of? Because we're looking at the masses. Does it really take care of the masses?
Of course, in a way, it translates to the masses, because ultimately, if what you're paying as a landlord is 7.5 down from 10, then you are likely not to transfer or at least give a reprieve to your tenant. It may be minimal in impact, but at the end of the day, I think it's a positive. You are left with more income that you could probably channel elsewhere. Probably if you're in the business space, then expand your line of business.
I remember when this came up, and I think it was CS Rotich. At one point, they even tried to tell tenants to be exposing their landlords for the public. Did it work?
Why would you? Your rent will go up.
So they realized, because I think that's why they pushed it up first, right?
Yeah.
There was no compliance. So they've taken it back to 7.5. I don't know if I'm right. But it didn't work. It didn't work. Just like a lot of things that they're saying will not work. So I'd like to assess from your points of view. I know the public institutions, individuals have presented memos to Parliament. They've told Parliament what they don't want to see in that bill. But from where you sit, the three of you, do you think this voice will be listened to? At the end of the day, when it goes to Parliament, will they, or the government has to get its way? Because I sat here with Kimani Ichung'wah. I said, at the end of the day, we have to get this money from somewhere, and that's where we come to your point. We have to pay debts. In fact, what we're increasing basically will still go to debt. So from where you sit, the three of you.
Maybe I think to a large extent, some of the proposals may end up selling through, because ultimately that deficit has to be funded. So
especially the ones that have been spoken
of course,
against.
The ones
that's
we've
my
spoken,
interest.
Yeah.
Yes.
I think the ones we've spoken against, ideally, if you can have them reviewed, yes. The question is, and that is what I had asked earlier, what are you replacing them with? For every proposal you claw back on, there must be a new proposal you're bringing on board. So most likely, you may end up with a scenario like what we had with the housing in last year, where there was a lot of hue and cry, and what was eventually amended ended up being more punitive. Yeah. So for me, my thinking is for us to be able to support some of these proposals that have been made, we must give a counter narrative or a counter proposal, so that then the team led by Kimani Kuria can then look the other way. And I still go back to my suggestion earlier, Mijungu, that we may need to focus our lenses a little bit on our monetary policy. And through the monetary policy, I believe we can still claw back some 200-300 billion. And if we were to do that, then we would give the taxpayer a bit of reprieve. And the way I would look at it, if you would reduce the interest on public debt from an average of 10% to about 7%, through a fiscal policy decision, you decide, let's bite the bullet and bring back interest rate control, bring down the CBR to even 7%, give a maximum of 11%. You will allow...
What is that compare it to the region? Which region has the lowest? I mean, compare with the countries in the region. Is ours the highest?
Our current interest rate on public debt, especially domestic debt, is unheard of. It's terrible.
It's the highest in the region.
It's very high.
Okay.
Because the government has to borrow anyway. And if you leave it to market forces, that is where it goes. So you can't also fault central bank on raising the CBR, because you leave it where it is, you're not able to raise. The investors hold back on their money because they know you are caught in a very tight spot. You need that money from the space you are. Okay. So what do? Change the law, bring back interest rate control. Of course, there are certain aspects that may turn out negative in terms of how the dollar would react, in terms of how, but looking at the overall impact, it's an idea worth toying with. Because if you can reduce public borrowing on all these treasury bills to even 10% from 15, that 5%, if you apply it on a trillion, on 10 trillion, you're talking of close to 500 billion. So if you can significantly reduce that interest on public debt, even by just 200 billion, by addressing the monetary policy, then that benefit is then thrown to Wanjiku. And then you say, now we can relook at some of the proposals. For me, that is so that then our debt service cost goes down a bit.
Yeah.
And you'll have sorted out the immediate challenge. Of course, that would also bring challenges in terms of imports, because getting dollars to bring in imports, then there's a likelihood that those costs go down. But it also gives you an opportunity as a country to think about the 20 by 30 proposal, that we need to move our manufacturing to 20% of our GDP by 2030. So what are the measures? We must discourage imports anyway.
What is the current percentage?
It's less than, it's gone down from 10% to 7%.
It's even less. It's even less. And as you respond to that, one of the things that the Kenya Association of Manufacturers told Parliament, the introduction of a lower VAT rate for manufactured goods should be replaced with VAT exemption to reduce the cost of finished goods. You understand? So the introduction of a lower VAT, they're introducing VAT, right? A lower VAT, but they're proposing it should be reduced to increase VAT on exemption to reduce the cost of finished. So the idea is, why don't we replace it with a reduction in VAT for finished goods, unfinished goods in this. Am I getting this right? So they say the introduction of a lower VAT rate for manufactured goods. That is what has been done, instead of VAT exemption to reduce the cost of finished goods or products. That's what the explanation.
I would look at it from a broader context, because you'll make this proposal this year, next year you'll probably go back. I would look at the fundamentals underpinning high costs of manufacturing in the country.
Okay.
Besides taxes, there are basic costs of production, including electricity costs, which is still very high. Labor costs is still a bit of a challenge. But I would narrow down on something like a cost of electricity. What is it that we can do to be able to lower that? Because there is some legroom we can do. We can be able to move.
Okay. So still on manufacturing, plant and machinery and under Chapter 84 and 85 should be VAT exempt to reduce investment costs. So it's still the same thing you're talking about, so that next year we're not on this. So for them, I think it's more of reducing the cost of production to spark growth. But let me go to Ronald.
Yeah, so maybe let me just respond to Hesbon's concerns about where would you get an extra coin. And what I can say that the laziest thing a government can do is raise taxes. And the most easiest available option when there are no funds is to raise taxes. But the most effective way is to increase efficiency. And one time the president was speaking, and he said some very important things that we need to note. One is the wastages that are happening in state corporations. In the last budget, the other CSA Rotich, not Rotich, I think the other Ukuriatan, so only 3 state corporations give dividends to government. So we have, if you look at even the likes of KQ, 30 billion loss every year that the government has to finance for operations. If you look at most of the state corporations are loss making. And if you look at their allocations from this budget, is to actually finance those losses. When you hear that funds are going to Ministry of Agriculture, you'll think that that money is buying fertilizer and all that. That money is just paying salaries in for government state corporations that are dysfunctional, not doing anything. So the first thing is that I like the privatization aspect of the government, whereby you are trying to privatize and sell some of these idle assets. Even if you look at the public universities, some of them have huge property, they have huge investment that are just idle, never being utilized. They cannot even rent them. There's a lot of inefficiency. And sometimes the biggest challenge also we have as a country, when you're looking for somebody to lead some of those organizations in a CEO capacity and all that, you're looking for a political appointee rather than an expatriate to go and turn around that particular organization. So there is a lot of inefficiency in our asset management, in our state corporations, and one of it could be privatization, one of it could be leasing them out, like the one you said about KICC, because why will you have such a very huge investment giving you very little return?
600 million.
And those could be options to cut that budget. If the government just introduces efficiency and effective utilization of resources and making sure that all the state corporations are either operating at break-even point or they are making some profit. Then if they are not, then they be actually leased out to the private sector or they be sold out altogether. And you look at, because the biggest challenge we have as people, because people will only be paying taxes. You drive today in the city is so dirty, in spite of people paying, increasing even the property taxes that people are paying. The city is dirty, so confused. I drive to the office, I find mama mbogas sorting vegetables on the road, and they're being told the taxes have grown. Because the easiest part, and you wonder how much even will it cost the Nairobi County to clean the city. You feel even embarrassed, and especially if you travel to our neighboring countries like Rwanda, you come to Kenya and wonder what happened, and we are boasting we have the highest tax collections in East Africa. Really, what has even that helped us? So the biggest problem we have with our governments is inefficiency, is the laziest part of just saying we are increasing taxes. And the other thing that the government has not addressed very seriously is the issue of corruption. And you see, corruption is not even supposed to be fought. There must be public confidence and trust. It must be seen to be fought rather than even fighting in it. So today you feel, for most of us, we feel there is no corruption because we've not had a very strong public declaration about corruption, trying to reduce wastages in the government ministries and all that. So that is what the government could do and actually could increase. So yeah, they will move on with, maybe they might not listen to the people and go to the parliament and pass these laws. But you see, that is actually every day there is a rift between the government and the citizen. As they try to fight, because now we have the housing levy, now they're introducing the NSSF, they've introduced the SHISH, and the NHIF, increasing the rates, and there are no services. You have NHIF, you pay, you go to the hospital. In fact, what they could have done is first even just make sure the little people are paying for NHIF is working. The small they are paying is not working, and you're saying you want to increase it to 2.7%. So the government is like thinking people have unlimited income. You can tax them to heaven, and they will still pay. So first, they need to increase public confidence in the tax administration. They need to make sure there is no corruption. People need to experience services. Even just apply for simple things like ID, you cannot even get. And the government is telling you is increasing. Transferring land in this country is drama. You want to buy properties, drama. The Ministry of Land is drama. You want to get a work permit, go to Rwanda. 7 days you have a work permit. Come to Kenya, when they ask you go to to get the clearance, it take you forever. So we're just fighting to collect money, but we're not trying to inspire public confidence by making sure that there's effective service delivery.
Okay, and Diana, one of the ways that I think they can inspire public confidence is knowing that your government listens to you. And I'd like to go back to the same question they're answering. You made all the submission, reject, cancel, whatever it is. At the end of the day, the government came up with this because that is the best way they could raise this deficit. What happens if at the end of the day, the debate comes, and we are not preempting, we are not members of parliament, so it doesn't matter. Yes, we are Kenyans, and Kenya is our business. Yes, what if they pass this the way it is, regardless of what Kenyans said?
First,
because they're likely to do that.
Yes, very likely, very, very likely. First is to say that I think I have seen a shift in the general debate and the relationship with members of parliament. Not necessarily the finance committee, but this time round, I have noticed a number of members of parliament getting into spaces to just get to understand the implications of the finance bill. This time round, we even saw members of parliament going to make submissions publicly to the finance committee, drop these types of provisions and mechanisms. What then if they ignore us like they always do and bulldoze their way? Part of the problem we are facing right now in our taxation and our general fiscal policy is the fact that we set aside everything about our rule of law, our nature of representation as a democracy when it comes to matters taxation. There is nothing about tax that follows the architecture of a devolved system of government. The Senate has no say whatsoever whether we increase tax or we reduce. They have no say in how we borrow, okay? By the time the National Assembly is presented with a statement by the CS Treasury that we have redeemed our Eurobond at the highest possible interest rate globally, it ends there. It ends there. So there's something, yes, there's something fundamentally wrong. And Parliament has continually used the excuse, oh, it was party lines. But the pain that Kenyans are feeling right now, once they pass all this, I think Kenyans need to now convene. And especially because the 7th review of the IMF said, you still need to collect more revenue. You're not doing well. The revenues need to go up. So while I hear FCPA here that we need to
find an alternative,
for the deficit, I am very concerned because the budget making process in Kenya is a tick box exercise. Right now we have $500 billion in deficit. But by next year, June, we will be passing a supplementary budget that I am sure will take us back to $1 trillion. Oh, we were not able to raise enough revenue. Oh, the interest rate got this higher. There is no deliberate effort to look out for the interests of Kenyans. And I think that's one of the fundamental problems with our public finance architecture. Article 203 says, whenever you're dividing revenue, first begin with national interest. What is our national interest? Is it to repay debt? Is it to increase taxation? And you know, the unfortunate thing about budget and finance process is it is such a complex thing. It is such a complex thing. Even for us who have gotten, we have to listen to ISPAC, listen to all the tax consultants and companies, get to understand that the Association of Manufacturers is saying we have already reduced our contribution to the GDP from 11% to 3%. As a result, these jobs have been lost. If you introduce these taxes, we lose these other jobs. Balance of trade, we now are net exporters of everything. Agriculture will not grow as a result. If the members of parliament can no longer represent us on such critical issues, where we can feel it every day, our children are not in public schools are not getting the required services, in universities, in health centers. Why don't we organize ourselves and tell them what we need in the budget? You get? Because every public office in this country still has 3 secretaries, 2 drivers. You know, why? FCPA, you drove yourself here, right? Most probably. Why can't our public officers do that as well? You're killing other economies, but government still lives in extravagance and corruption. Must we repay this debt and die
40%
as a country?
of our budget goes to paying recurrent expenditure. Yes, 40%, 1.1 T.
Yes, then you add consolidated fund services. Right now, development is at below 10%. What is that? What are we doing to ourselves? We keep saying we have a 10 trillion debt. Where is it in this country? If that happened, KTN would move from being a national media group to a global one, a universal, like planetary wide. You could cover all the planets with that money, but we don't see it. And there is no serious efforts to address that. So I think Kenyans need to wake up. Luckily, the middle class is now very affected. Our pay slips have been raided. I hope the pain will.
How much
finally...
is it? How much is it? Have you computed how much of your pay slip remains now? It could be about 60 or less, or it's 50. Looking around the
like 50%.
No,
50% is
direct is 60.
Direct is 60.
Yes. Then when you do the indirect, you're left with a good 10-20% before you type.
Sarah laughing matter.
Before you type.
I see Sarah Naboyera is watching from Uganda. I'd like Sarah for you to tell us about the experience in Uganda. What is your budget? Is there such an outpro in your country about the proposals? And tomorrow, luckily, we'll be broadcasting from all the countries in East Africa. We'd like to see, depending on the time they come, we'd like to see what they're broadcasting about this budget. So Crispin Lumbasi from Nakuru says that Kenyans have been pushed so much to the edge regarding taxes. In fact, there is no more space for any. But I know you want to respond. We have a few minutes on the clock. The aim of the government is to expand the tax base with the aim to increase revenue. So at the end of the day, with all this, we ask, will the tax base really expand? And talk to me about the deficit in the revenue collection last year. Did we meet our target, for example? If we didn't meet, how then do we expect this ambitious target will be met? And then do we go back to what Diana is saying? Because at the end of the day, there'll be a supplementary. And we must borrow more, because if we had a deficit last year against all these proposals that were made, which, by the way, last year same time we said were very punitive, were impractical, especially the housing, affordable housing fund, right? Which, by the way, was invested in the bonds. It's not building. Talk to me, husband.
I think I hear you, and I hear the concerns that Diana is raising, and the fact that Parliament, being the oversight institution, has not been of help. But it's not that like we found ourselves here today. Like I said, if you had me in the media stations just before the last elections, I said I pitied the next president of the Republic because this was coming. For 10 years, we've had revenue collections that vary with expenditure to the tune of close to $1 trillion. And therefore, it's no surprise that we are in this space. But again, there's something else that is also silent at Parliament, that the component of NGCDF that members of Parliament are patronizing is a function of our budget. And therefore, if you reduce the budget in terms of absolute figures, your allocation to NGCDF definitely goes down. There's a direct correlation. And I think that is where the rain started beating us. So that you know quietly that if this goes down, your share of what you are able to control at the constituency level goes down. Now, once you lose that, then the discipline around that space within the parliamentary space is lost. We talk about Senate that they should be able to step in. But ask yourself, of over 1,250 audit opinions in the entire Republic since devolution began, only 6 are clean audit opinions. And every year they review this. So what sanctions are they giving to the various county governments and
I need to ask you
it's
this.
Huge.
I need to ask you this, Hesbon. When you talk about this deficit, do you talk about the deficit in relation to the projected collection? Because we need to understand this deficit also. Is it in relation to the total budget, or it's in relation to the projected revenue collection? Because if we didn't meet that, we didn't meet our target last year, and now the deficit, we talk about it between 300B to 500B. So when you constantly mention it, what is where are you measuring it against? The projected budget or against what the projected collection?
I think, for example, we are talking of 3.9 trillion budget.
Yes.
The ordinary revenue that KRA projects to get is about 2.9 trillion. Now, before you add anything else, in terms of ordinary revenue and the overall expenditure, that's already a $1 trillion gap.
Yes.
Okay, given that there could be what you call appropriations in there that would come here and there, you could then borrow this from bilateral partners and other sources. Then you have this component that you have to go to the domestic market to borrow. And therefore, that said, then now you ask yourself, of this 2.9 trillion, this is the ordinary growth of revenue based on the growth of an economy. You projected to collect 2.5 trillion the previous year. Now you project you're going to collect.
Sorry, I'm cutting you, but is it really based on the growth of the economy, or the government thinking that we're expanding the tax base to collect this?
I think there is the aspect of ordinarily the revenues would grow because the economy is growing, the GDP has grown, and therefore there's a natural growth in what you collect year in, year out.
Okay.
But then now there's this gap that now you must come up with tax measures that generate the extra gap that you're having. Now that is where the finance bill now comes in to try and tinker with what you have to raise that gap.
Okay.
And that is where now the rubber meets the road.
Okay. That's where the problem is. Diana?
On deficits, both national government and county government, they play monkey and rabbit games with us every year. Part of the 10-year problem we are in is that particular deficit problem. An overambitious government that always wants to project they'll have this huge expenditure. When they are asked questions immediately, the response is, we will raise this much through revenue mobilization, whether it's taxation. There's not a single year we've met our
There's no other way.
A taxation target.
There's no other way.
And it's the same model in the counties. They say, oh, we will do domestic revenue mobilization. A county that has no parking slots, nothing, says they will raise billions. From where? Just so that the budget is approved and it looks balanced. Then year in, year out, we are here. Last year, the IMF raised questions. We are listening to the IMF very much and said the deficit was too high. We didn't reduce the deficit. We increased the targets for how much revenue we will raise. We've not met it.
And
We've not met it. This is the same thing we are doing. The deficit is currently 500 billion, but the proposed revenue tax is over 300 billion. 300 billion. Last year was 100 and something billion. The other year was 50 billion. Has the economy grown that much that we will be able to raise that much revenue within a span of 48 months? No. And if anything, based on where we are, COVID and everything else, we should be doing everything to grow our economy, production and so on. But all the taxation measures we are introducing are to kill that. Then what? There's a very, very huge problem, and I hope, I don't know why you even have that chapter on public finance.
I think there's a counterbalance.
You're quiet, I'm coming to you.
I think there's a counterbalance, and I agree that, of course, the deficit has consistently reduced, but also what then ends up is that when you have a strained cash flow in terms of how taxes are collected, then it ends up appearing in budget absorption, so that you rarely then end up with 100% absorption of budget. You're probably going to do 85 or 90% absorption. So silently, you've budgeted for something, it's not been spent. So eventually then, the agenda that you expect to be able to deliver as an economy then is compromised. So there are a lot of things then that need to be gotten right. And like she says, if you go to counties, for example, the pending bills in counties is directly related to overestimation of one source revenue. It is so obvious. You know you can only get a billion, but you say you're going to get 2 billion. You are going to commit business people to contracts on the basis of a budget that has 2 billion revenue. You have created a billion pending bills, and then it becomes very difficult to settle.
Yes. Problem.
Yes.
I need to ask the last question, but I need you to weigh in on this.
Yeah. What I can say about overestimation, it has led us into a very big problem in this country. One of the biggest problems in this country, if I give services to Hesbon, there's a very highly likelihood, even within 90 days, they will not have paid me. And where have we gotten this culture? We've borrowed this culture from the government. The government, because of our estimation, they consume services and they don't pay. And I was seeing something in this budget that is very ridiculous, saying that now you're going to introduce withholding tax of 5% for goods supplied to the country. And you know, there is a tax case that has said withholding tax is based on accrual, not on cash basis. Yeah. So you're saying if I supply goods to the county government, they will hold 5%. I should pay 5% to the government even before they pay me. And more probably a year, 2 years, 3 years, they have not paid me. I'm insolvent. Most companies have gone insolvent because of overestimation and the issue of pending bills. And now that culture has gone into the private sector. People don't pay. Actually, I was talking to one of the person who left this country to start a business in another country. They were saying, Rona, the beauty about this country, people pay. The government pays, private sector pays, so you can run your business. But in Kenya, you offer services to people, and you can't blame them because they'll tell you, you know what, I supplied government. So government has perpetrated an habit of default whereby we are consuming what we can't afford. We are consuming things that we have not budgeted. And that is where overestimation, over budgeting has led us to. And people don't care. And you see, you look, even most probably, we need even to amend our tax system. We say VAT should be on cash basis. Because where are we saying VAT to be on accrual basis? I raise an invoice to a government or to somebody and they don't pay, and I'm asked to get a loan and pay for taxes. So you see, you know, everything rises and falls on leadership. There must be government leadership that inspires some form of behavior in an economy. And I always say that, you know, there are two roles of a leadership. There's behavioral role and there's a stroke of the pen. The tragedy is most of our leaders are actually just concentrating on stroke of the pen, but not changing behavior, culture of people. When I look at Kibaki's government, one of the things that probably will be credited to is not necessarily building Thika Superhighway. It's just changing our behavior, our mindset, and our culture, the way we treat even the taxes. Just trying to tell people now you can pay your taxes because you will get services. And that is what a government should concentrate in, just trying to change our behavior and our culture and regarding us being creditworthy. Okay. Yeah.
I know we have 6 minutes on the clock, but we began with this, so I have to ask questions on this. The move could perhaps help in future, or it could not help. The president has said, in no uncertain terms, that you will thank me for this, right? The argument, and I know you will all argue this way, that if we were able to pay our debts, then we'll sort out all our problems. Because even the money we're seeking from the public, from the taxpayers, majority of it, as he says, will go to debt. So is this the antidote? If we got to a point that through our own sourced revenue, without borrowing, we are able as a country to be able to pay our debts over time, in probably the next 3-4 years, and we settle this debt, in spite of the fact that we borrow every single day still, we'll be able to get out of this hole, and we can get to a level that Mwananchi starts filling the services. Because is it 8 out of every 10 shillings goes to pay debt, right? So if we are able to reduce that significantly, then we'll have more money at the top that we can use for the benefit of the Mwananchi. I'll begin with you, Esma.
I think, yes, and the reality is we did rebase our GDP sometimes in 2014, and with that we moved to a space where borrowing became expensive because we became a middle income country when we were technically not at that space. And of course we got legroom to borrow. But now where we are, we have to pay this debt. Debt and taxes are certain. And if you want to get ourselves out of this, sometimes you may not tax yourself out of it, but consider incentives that then ensure that the economy continues to grow. Let's not kill the economy. And for me, what we are paying to service debt, and it's very simple, we have to have a conversation. A country like Kenya is not a corporation, a blue chip company that pays 10% return on investment. We are paying 15% on public debt. We must ask ourselves, and we must have a conversation with the commercial banks. Can we go back to a regime where you are part of the sustainability of this nation? Mm-hmm. Because you can blame the president the much you want, but where we are, I would ask, last year the budget was 3.9 trillion. Whether or not that was spent, we have done the same. So at the very least, even if everything else has not gone better, that has not gone up. Now, second thing, revenue projection has gone up, even if it's marginal. So therefore, that has been narrowed. And you can see it in the real gap between GDP to deficit to GDP. And that is consistent with the Kenya Kwanza manifesto that they said they'll reduce it gradually over time. Yeah. And of course, that then comes with painful consequences to the consumer. it may be something bad before we get better. I like the analogy that Moses Musalia Mudavadi used, that we'll have to go through some pain points for another 3 years before we get back to a stable space.
Okay.
And therefore, my plea to Kenyans, yes, there are certain things that need to be looked at, but I want to be on the table where we are saying, reduce this, remove this, but the solution is act this way.
Okay.
And that's why my suggestion is, it may look far-fetched, but if you reduced our interest on public debt, especially domestic, because it's the worst, it's about 15, and external debt is about an average of 5, 6. It's a huge gap. If we reduce that, then we'll have a proper conversation. Because when we dropped the interest rate controls, one of the things we told the common man is that commercial banks would lend their money to the private sector. Exactly. The truth of the matter is, if you look at the bottom line for all the commercial banks in this country, almost 50% of the profits they're making is from government. And that is public taxes. Yeah. So we must have a conversation.
We're hurting as individuals.
Yes, and then now you ask the government, bring the measures around what my friend has suggested, that the government needs to be, we need to clean out wastages. That is good. Okay. That needs to happen. Okay. But beyond that, I think we've done a little bit better on the fiscal space. We must look at the monetary space.
Diana, as your closing remarks, do you think we'll get there eventually to kaze kamba? Inasema kaza kamba,
no. And people should stop lying to Kenyans that we are kazaring kamba for the right intentions. Until we deal with leadership, transparency and accountability of our public finance, there is nothing that shows that we are on a good trajectory. We are acquiring more expensive loans than were acquired before. We have moved away from borrow for development to borrow to repay and look good. We will be in pain, exactly. We will be in pain for a very, very long time.
But eventually?
We will still be in pain until we alter the leadership of this particular country. Okay. On the debt question, yes, we must repay. But was all the debt that we are repaying, did it come to this country? No. Some of it never even hit our consolidated account. It didn't. And that is what we have borrowed. Leave alone the local commercial loans. An international Eurobond at the highest possible interest. What's the rush to pay that? Why didn't we answer all the questions that were asked by the Auditor General? Yeah. Set it aside and say, look, we will not pay. SGR, we've never seen the contract. But every year we are paying interest. We don't know. We are not sure when it will ever become profitable. Or now we want a super expressway on the same route, the same area. There is nothing that shows that we are on a path to recovery. If we continue like this, we are just continuing to create rich political leaders and very poor people who are disempowered, who will wait for handouts again and sink deeper into poverty. The type of taxation we have and the surveillance that physically we are now being coerced physically and emotionally to pay tax and no services, we are not on a path to recovery. It is time for a rethink and a re-dialogue. Call for elections.
Sarah, I think, agrees with you. She says sensitization and proper strict accountability is a way to go. Otherwise, tax hurt regardless.
So I want to, before I give my final remarks, I want to talk to Esban.
Yeah, you have about 2 minutes to close this.
The issue of GDP, taxation to GDP. Yeah. We need to first understand what is GDP. How do we measure GDP? According to my understanding, GDP is just the growth in economy, but it doesn't tell where the growth the economy is growing. You might have very few people who actually have wealth and very many poor people. But the challenge is our taxation regime is taxing everybody, especially now it has resorted to a lot of indirect taxes, excise duty, VAT, that is not targeting the rich.
It's bottom up.
It is
taxation.
bottom up. It is actually very counterproductive. So we are talking about tax to GDP, but who is rich in the GDP? You know, GDP, you need to know who is benefiting from the GDP growth. So I think for my remarks, especially maybe just a piece of advice to our government and the legislature. Yes, the president is saying we will one day celebrate, we will be one day happy and thank him. But you see, leadership, it should not be a drudgery. It should be communicating the vision of where you're going, and the leadership should carry along the citizens. The leadership cannot be lonely. As it is now, we are lost. The president and the people in the government are miles far apart by the citizens because they have not carried along the citizen. You know, in leadership, there are three critical things. One, there's a leadership of position, where you sit in position. And two, before you go to the second very critical part is permission. Permission, people agreeing that you are a leader, you have the necessary capability, you have the vision, you have the drive to take them where you want. And then after you've earned the people's permission, the trust, that's when you go to performance, whereby now you can raise taxes, you can increase the infrastructure, you can fight, you can do other things. So you see the problem we have with this leadership, they're trying to jump from position to performance, but they have not earned the permission, the trust. The people don't believe that these taxes are going to impact them through transparency, accountability, service delivery. You know, even with the little they have gotten, people we're still in mistrust that will they really do? If you're telling me to pay shit, and I've paid NHIF for a long time, I go to the hospital, I've been paying 1,700 for so many years. Only time I go, I can only get 4,000 shillings. It looks like robbery. It's like daytime. It's like government has resorted to robbing the citizens for whether they like it or not. So they need to be that kind of streamline, and we hope that the parliament will hit to the contribution that has been made through the public participation process and make the right decisions for the future of this country. Thank you so much.
I'm very grateful for this conversation. I hope Kenyans, because we started from Kenyans knowing what is in it for them, because the conversation has always been favoring one side, the citizens, and not the government. I'm glad tonight, at least we have found a little bit of good things in there for the citizens. But at the end of the day, I think what counts is what is the citizens getting out of whatever the government is doing, because that is the measure for us. What do I get when I go to the hospital, when I go to the CBD, right? What do I get out of it? And I think that's where the conversation has to go from here. And next week will be critical. And gentlemen, ladies and gentlemen, I really wish that we have a conversation, especially after we have seen what Parliament has done with the proposed amendments. It will be very key. One of the things Kimani Kuria said is, Ken, I really want to come, but I will not come before we amend. Because what am I coming to talk about? We know what's there, but we have had proposals. So after that proposals, I'll be calling you back, and probably we'll have government on the table to try and say if there's something in there that they had, especially following the submissions from very eminent Kenyans and organizations that they need to listen to. So I want to thank you very much, Ronald. First time in our studio. I'm glad you came, and you're doing a good thing for Kenyans with a homegrown solution to, is it auditing?
Yeah, auditing, tax and advisory.
Exactly. So you're doing a good thing. That's why we wanted to have that homegrown discussion here so that we understand. And as always, Diana Gishengo, asante sana for coming tonight and sharing your perspective, always for the citizens. Asante sana. And Hesbon, thank you so much also for coming tonight and sharing your perspective. I'll be calling you back next week after how long does it take for Parliament to deliberate on this? A week or two? Because the new year begins immediately, right? Okay, so I would definitely be calling you and have government here. Joanne is harassing me. I need to stop this show. Thank you so much for coming on behalf of the whole team. Sign language interpreter earlier. Joanne is on my ear. Santeni sana kwa kuja and for speaking to us. We are Kenya. Kenya is our business. Let's see what happens tomorrow. You already know what's going to happen. They're just going to make it procedural. But after that, we'll compare with the region. KTN News will be comparing with the region, Uganda, Tanzania, and Rwanda. We'll be trying to get them live when they also read their own pieces of budget from the other side and compare with what we're doing in Kenya and how many miles ahead are they, especially in terms of revenue collection versus what they're spending and what they're asking their citizens to do to contribute to that revenue collection. My name is Ken Mijungo on behalf of the whole team. Have a good night. God bless. The conversation continues. Remember, it's just a formality tomorrow. Good night.